The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, joining us now to discuss the crypto markets and more is Rayne Steinberg, CEO of crypto investment firm Arca. Welcome to the show, Rayne. So what do you make of this pullback we're seeing in the markets? Is this China crackdown something to worry about, or just more fear, uncertainty, and doubt?
It is a little bit different, obviously, as a full ban. We read it the same way, but not banning ownership. This was actually telegraphed back in September 15th, so about 10 days ago, and the market mostly reacted to it. We're getting a lot of color from our desks and counterparties that mainly retail selling, not traditional funds or even crypto funds are really selling into this.
So yeah, this is clearly big news. But I was just sort of saying in the intro, it seems like the impact on price is relatively muted, right? With an emphasis on relative. I mean, it seems that China is not having the same kind of impact on global markets that it would have had in the past. I mean, considering how dramatic this announcement appears to be, would you agree with that?
Completely. And when you look at what happened with miners, that was seen to be as a very serious event for Bitcoin, and it was. But serious not really in the negative way. It proved kind of its resilience. So there was about 60% of the mining capacity in China when they kicked out the miners. There was a huge drop in hash power, but then that almost immediately recovered and is now higher when mining went to other areas. So where if mining was still in China and some of the other things had not happened, this might have been a bigger event. But this really shows a diminishing power of China over the market, and also a maturation of crypto and Bitcoin as well.
Rayne, let's get back to that ownership question, because if is what we're seeing right now, basically the Chinese government hinting that, look, we might come after ownership down the road. Right now, we're going to ban things around crypto. But ultimately, our long-term plan is to not allow you to own any whatsoever, and we might come after you, but we're going to give you some time to unload somehow, however way you can, before we start knocking on your door and taking you away. Do you think that that's what's really going on here, or do you think that it's just sort of like a kind of like a half-hearted ban here?
Unclear yet, but when you look at the Chinese state in general, this is a command and control economy, and a state that is controlling more and more of people's lives with things like social credit. So it doesn't surprise me that as Bitcoin or crypto, our digital assets gain prominence or interfere with the projection of the state's power, that the state would react like this and could go to a total ban. So when it wasn't that big or wasn't that big a threat, left it alone, and you can see a different reaction now as it gains prominence.
Mm-hmm. Also, you have a bit of news to announce. Arca Labs and Securitize are partnering up to offer tokenized financial products, beginning with the Arca US Treasury Fund. So tell us about this new offering.
Sure. So we're really pleased to announce this partnership with Securitize. And this offering is the first 40 Act approved fund, closed-end fund structure that allows you to hold short duration US Treasuries. But the digital share of record, the way the client interacts with it, is on the Ethereum blockchain.
And you're doing this deal with Securitize. Do you think that the growth of the NFT market in recent months signals a willingness for the market to trade in asset-backed tokens? Is it warming up the market for what Securitize does?
It is. But people just have to realize that the securities market and asset-backed, and the way things like Securitize work and Rcoin and the Arca US Treasury Fund, this is still a very early time. Prior to this, I co-founded an exchange-traded fund company called Wisdom Tree. And I feel like it's a similar point in the ETF evolution as the early 90s. So very early. And a lot of the regulatory and legal structures have to come out. So most of the people that are here in crypto are here for other reasons. And some of the larger players that are more interested in heavily regulated, legal structures are in a wait and see mode. So there's very little impetus for them to get involved. Now, things like NFTs that are offering specific value propositions are getting people over the line. But those people with very high legal and regulatory thresholds, there's a lot of risk to coming in. So products like Arcoin and the Securitize offering remove some of that uncertainty and allow large institutional players to benefit from the benefits of blockchain. So, instant transference, immediate settlement, fractionalization, all of those things that we love in digital assets. But it's just difficult for large players to come in.
Right. But the spirit of crypto celebrates financial freedom and more open access to the financial system. So if I'm not a high net wealth investor, can I access these products? And if not, is something lost in that?
No, absolutely. This is the reason we went out under the 40 Act, is that this is the broadest, type of financial product that can be offered to the retail public. This is the same act that oversees mutual funds and ETFs. You could think about this as the next iteration of the ETF on blockchain. And we believe in all of those things about digital assets, but we're not dogmatic in about how we get there. We really think increasing utilization, bringing more people in, and a big tent, and that includes regulators, because this is a very confusing time for them. And we're seeing a lot of, if we want to say FUD, fear, uncertainty, and doubt around US regulations as well. It's just a very difficult time. They don't know how to regulate this. So we're trying to create products that make sense to everybody while we enable this digital transformation.
So, Rayne, what kind of products are going to be offered to your clients here? To your customers, what are they getting? Like, are we looking at tokens that are based on, traded assets elsewhere? And also, is there any worry about how the SEC will approach this? And do you think that the SEC might change its mind with how digital assets or asset-backed tokens are traded?
Sure. There's a couple of things there. So in this product specifically, we submitted our perspective and received exemptive relief back in July. So this is the same as an ETF application that has been approved. So this is actually in the market, and anything that could be put in an ETF or a 40 Act wrapper could be put in, what we call the BTF structure, the blockchain transferred structure or blockchain transferred fund. So that works within our current regulatory system. Some of the other things that are going on, DeFi, other asset-backed tokens, there's questions whether these are securities. And this is, I think, there's going to be some uncertainty and some overhang while the commission figures this stuff out. There's a fine line between stifling regulation or inappropriate regulation or regulation that stifles innovation. And also regulation that protects investors. So they are trying to do that, and we've had very constructive conversations with the commission during our application process and during after launch. So I'm quite heartened by their approach.
Mm-hmm.